Bitcoin has recently plummeted to beneath $60,000, and judging by the despair you're also probably seeing all over social media, you may be thinking that now is the time to be bearish on Bitcoin. So let's take a step back and actually do some rational analysis to see if this is really the case. Today, we're going to be doing a roundup to discuss Bitcoin's current conditions. And as I film this, the Bitcoin price has recently bounced back from that temporary dip we had beneath $60,000. We can see here we came as low as about $58,500 and now sit about $3,000 higher than that at about $61,500. And as I said before, if you look on social media platforms like Twitter or many other YouTube content creators, it seems like a lot of people are becoming incredibly bearish over the month of July, which has seen the month of June, which has seen downwards price action for Bitcoin of minus 6.3%. That's it, minus 6%, and everyone seems to be losing their minds to some extent. If we just quickly look back to the previous bull cycle, we actually topped out in late 2021. So we can see here that in this bull cycle, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We'll say 10 months of over 6% negative returns, less than, you get my point. Whereas this cycle so far, we can see that so far we've had 1, 2, 3, and this would be our fourth. So this is very common. In fact, dips of more than 20% are actually very common throughout Bitcoin bull cycles. This is actually only one of the few times during this cycle we've seen a top to bottom retracement of just slightly over 20%. So really things are pretty normal. And I know there are a few other bearish catalysts that are leading people to maybe become a little bit more long-term, medium-term bearish on BTC. But if we just look at a few charts initially to kind of argue that point. First of all, if we look at the Bitcoin funding rates, we can actually see here we're on coin-denominated funding rates over a 24-hour resolution. We can see these recently actually turned negative, meaning that more traders were actually shorting Bitcoin using coin-denominated, coin-collateralized Bitcoin derivatives, which traditionally is just a great counter indicator. We can see throughout pretty much all of this cycle so far, every time we saw negative Bitcoin funding rates, we at least had a little bit of a relief bounce. I mean, we kind of have seen this jumping up from that wick beneath $60,000 to about $58,500 to where we are now. But we can see here that every time we've dipped beneath, even if it was only temporary, here we were at about $61,500, we jumped to 67, and here last time we were at 58, pretty similar low to what we've just set in this most recent downwards move here, before we ran back up to over $70,000. So short term, I think maybe we'll do a little bit of a rebound. And if we look at something like the short-term hold at realized price, we can actually see that we're actually just beneath this line here. This is the average cost basis of new market participants on the Bitcoin network. And we can see if we zoom out here, historically throughout bull cycles, this has been a major level of support for new buyers coming into the market, or maybe experienced buyers buying from those capitulated new market participants at their break-even price. And right now, this currently sits at around 64, nearly $64,500. So I think that's going to be the key level to reclaim. But it's not unnormal to see Bitcoin maybe dip temporarily beneath this. If you look over the last few cycles, again, this has been a great level of buy support throughout bull cycles, but it's not like a hard line in the sand where we see Bitcoin immediately touch that line and bounce above. We actually quite commonly see Bitcoin spend a few days potentially beneath this line. So if we can reclaim this in the near future, then things will definitely look a lot more bullish for a more sustained rebound. But what is actually making people, in terms of fundamental events, a little bit more bearish on BTC? Because a lot of the technical and on-chain metrics point towards kind of mixed points of view. I suppose anytime you have a 20% retracement from a high, things don't look great, but on-chain data looks pretty good. And really, we should be buying when there's blood in the streets. After a 20% retracement during a bull cycle, that's actually a very healthy sign. But a lot of people are looking to news events such as this one. Germany's government selling off confiscated BTC. We can see here about $3 billion in seized Bitcoin is being sold on the open market. And we've actually seen evidence of this over the last few days, that this selling is actively taking place. So $3 billion in BTC potentially being sold there. If we go here, again, something we've discussed on the channel a few times recently, the Mt. Gox selling, which is about 140,000 Bitcoin. If we just go down here as well, we can see it's $60,000, pretty much our current price. This is $8.5 billion worth of Bitcoin that could be sold on the open market. So we're up to 11.5 right now. And if we go to this article here, we can see that there's lots of people suggesting that Bitcoin miners are offloading huge amounts of their BTC. And we can actually see from publicly listed companies like Marathon that there is some BTC being offloaded. We can see in the month of June, there's been 30,000 Bitcoin sold so far. So again, this is a pretty substantial amount of BTC. And if we look, we can actually see that this amount of BTC being uploaded so far is approximately $2 billion. So it looks like we might be seeing about a $13.5 billion amount of BTC being dumped on the open market. And if we just look to one of the videos we did a couple weeks ago, which is looking at the money multiplier effect for Bitcoin, this was actually looking at how much capital would be required to inflow into the Bitcoin market to send the price to $100,000. And just very quickly, briefly, the money multiplier effect is how much inflows actually impact the market capitalization of BTC. Many people assume it's $1 in equals the market cap increasing by $1, but we actually calculated this to be about 8.32 times. So it's 13.5 billion worth of dollars worth of BTC. This will impact the market negatively by about $112 billion. And if we go here to the Bitcoin price live page, we can actually see that the current market cap is about $1.2 trillion. And given the circulating supply of 19.7 million Bitcoin, this gives us the price we see today of around $61,000. However, if we are to see, assuming none of this BTC has already been dumped, which isn't the case, we've already seen a huge amount of this BTC being moved. But if we were to see this over $100 billion worth of impact on negative market capitalization, this would result in about a 5% decrease in the Bitcoin price, given a money multiplier effect of 8.32. 5% downwards move on top of what we've already seen really wouldn't look too bad. I mean, from the current price we're at now, 5% downwards would actually give us a price higher than the low we set a few weeks ago. Now, obviously, we could set 5% lower from the low we've recently set, but again, this would take us only to around $56,000, $55,500, which actually lines up pretty nicely with support we've seen in previous bull cycles. So that'd be a big level of buy support, I'd imagine. But really, we've already seen a downwards move already of 18.73% and have bounced quite nicely from the low we set, very rapidly actually, of over 5%. So really you need to ask yourself, if we are to see more dumping from the German government, more whales dumping, more miners dumping, more Mt. Gox coins being moved to be dumped, and it potentially has a negative impact of 5% on the Bitcoin price action, is it worth waiting for another 5% downwards move when we're already at a 20% discount compared to all-time highs? At this point, we're kind of looking at the asymmetry of trades, the risk to reward. If you believe a 5% downwards move before you increase your bags, before you buy more BTC, is worth waiting for, is worth not being filled on those bags before you see Bitcoin hitting 80, 90, 100 plus $1,000, then go for it. But I would say, given the risk to reward, a 5% downwards move from here after what we've already seen, given the upside potential of BTC, looking at all of the positive fundamental events we're seeing, looking at something like the hash ribbon signal, one of Bitcoin's best performing indicators, about to give us a Bitcoin buy signal, looking at the long-term holders, which is scooping up BTC. We can see this was at about 14.73 million BTC held by long-term holders less than a month ago, and right now we're seeing it at 14.92 practically. That's 190,000 BTC that's been transferred from short-term new market participants by these more experienced long-term holders with a long-term horizon buying thesis. That's already more Bitcoin than what we've potentially going to see dumped on the open market by Mt. Gox and the German government. So really, you need to ask yourself, is it worth being bearish here when everything else looks pretty bullish? I understand in the near term, things haven't been great recently, and we may still see multiple more months of pretty boring sideways price action. I don't typically trade patterns on the chart like these wedges, but really we could see volatility continue to be sideways and very boring in a worst case situation until the end of the year. These sideways moves, these liquidation moves where we wick temporarily above 70,000 or temporarily beneath 60,000 are really just taking liquidity out of the market. They're allowing coins to be transferred from these new tentative capitulation prone hands into these more experienced long-term holders who understand that everything in a medium to long term looks very positive for Bitcoin. And just because we have a temporary negative decline in price doesn't mean we should turn bearish. In fact, we should see this as a golden opportunity. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your number one source for Bitcoin information. So just to summarize, Bitcoin has recently seen a correction to temporarily beneath $60,000, resulting in what some may consider a mild overreaction from many suddenly bearish traders and investors. Like I said, just because we've had a little bit of a decline in the Bitcoin price action doesn't mean we should be overwhelmingly bearish. The number one thing that's going to impact sentiment is price action. And many people, as harsh as it is to say, are worth counter trading. When we see a huge majority start shorting the market, like we could see in the funding rates, beneath the average accumulation price of new market participants, like we could see in the short-term holder realized price, these are all indications of potentially an overreaction in the market. And especially when we look at the medium and long-term bullishness, it doesn't seem like good risk to reward to be bearish right here, at least to me, but you need to follow your own strategy. And Bitcoin frequently experiences these 20% drawdown moves, pullbacks, whatever you'd like to call them. What we could also see is that the facts that many people are worried about, the Mt. Gox, the German government selling, miners and whales dumping, etc. If it is to continue in that regard, it likely isn't going to have a huge negative impact. It's probably massively overblown, like we could see, assuming an 8.3 times money multiplier effect, and assuming none of it has already been dumped or the market hasn't priced it in, which isn't the case at all. We probably only see about a 5% downwards price action move. However, like most things, this is likely, a lot of this, a sell the rumor, buy the news type event. The fact that people are selling in anticipation of the market dumping is probably taking up a majority of that downwards move anyway. And like we could see with the German BTC, a lot of that has already been moved. The Mt. Gox coins aren't going to be all dumped on the market once. It's going to take months and months and months before these are redistributed. And a lot of them may not even be sold. And then if we can see miners dumping, again, this is very typical after a Bitcoin halving event, and has actually given us a golden opportunity, well, nearly given us a golden opportunity, as we're soon to see a Bitcoin hash ribbons buy signal. So from a rational perspective, looking back and taking a macro overview of the current Bitcoin market, I really don't see any reason to be medium or long-term bearish on the asset. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on the current Bitcoin price action in the comments below and on social media. Do you think we are likely to see more continued downwards bearish price action in the short term, which is of course always a possibility? The short-term predictions for Bitcoin are considerably harder than the medium to long-term predictions. So even though we can see somewhat bullish technical on-chain factors in the short term, I don't want to say it's a little bit more random, but ultimately the market can be influenced much more heavily by irrational emotions and short-term dumping, when really in the long term things can look very positive. But either way, let me know in the comments below and on social media what are your thoughts on the market currently, and where do you think we're going to be in the next few weeks and months. Thank you all very much for watching, and I'll see you in the next one.